Hey guys, welcome to the Pit Print by Portafolio Capital. I'm Mal Sanchez here with your Monday recap of last week's action in markets and the economy. Let's jump in. Last week, markets continued their climb with the S&P rising just above 0.5%, closing at an all-new record. The Nasdaq gained 1.5% with strength seen in technology and semiconductors. Unfortunately for the Dow Jones, mostly flat, dragged down by the weakness in energy and healthcare names. We're in the heart of Q2 earnings season right now, and so far the tone has been steady. Strong margins, solid demand, and cautious optimism. However, markets have responded well across major sectors. June's CPI report came out Monday, and that showed inflation up 2.7% year over year, with core CPI coming in at 2.9. The biggest price pressures seen in that report were in utilities and the auto insurance industry. Meanwhile, retail sales rebounded with a 0.6% increase, pointing to a healthy consumer spending economy. Jobless claims dropping to 221,000 for the week, further evidence that the labor market remains strong. The Federal Reserve officials that spoke last week kept a cautious tone, and while markets still see a possible rate cut by September, the Fed has made it clear that the decision will remain data-driven. Leading sectors last week all included technology, consumer discretionary, and travel. Utilities and energy were the week's laggards. However, crypto-related names rallied briefly on positive regulatory headlines out of Washington. This week, we'll hear earnings from major players like Microsoft, Alphabet, Tesla. Then on the 30th, we'll get an advanced GDP estimate for Q2. That includes corporate profits, all this coming from the Bureau of Economic Analysis. These are key indicators, guys, where we look at the economy moving forward and where we're headed next. That's your Pit Print by Portafolio Capital. I'm Mal Sanchez. I'll see you next week for another look at the markets and the macroeconomy.